Is AT&T stock a buy right now? This is the focus of this video, and we'll be also talking about the latest news about AT&T stock, its dividend announcements, and its latest spinoff. AT&T has announced that it has declared a stock dividend to affect the spinoff of 100% of AT&T's interest in WarnerMedia to AT&T shareholders. The record date for the stock dividend is the close of business on April 5th, 2022, and the stock dividend is in connection with the previously announced transaction to combine AT&T's WarnerMedia business with that of Discovery. AT&T shareholders, as of the stock dividend record date, will be entitled to receive shares of WarnerMedia SpinCo common stock, representing 100% of AT&T's interest in WarnerMedia. But the exact number of shares of Warner Brother Discovery Incorporated common stock to be received by AT&T shareholders for each of their AT&T common share will be determined immediately before the closing. AT&T shareholders do not need to take any action, and their WarnerMedia SpinCo shares will automatically be exchanged for Warner Brother Discovery WBD common stock in the merger. Beginning on April 4th and continuing through the business day before the merger closes, AT&T investors will have the option to sell the right to receive shares of WBD while retaining shares of AT&T stock, should they choose to. The timing of the spinoff is subject to the satisfaction or waiver of the closing conditions for the transaction. If certain closing conditions are not satisfied or waived in advance of April 5th, AT&T may elect to change the stock dividend record date to a later date. What's more, AT&T board of directors have also declared a second quarter dividend of about 27 cents per share on the company's common stock. This announcement finally confirmed the long anticipated dividend reduction for this telecommunications giant, as they reduced their dividend amount by almost 47% in line with management's previous guidance. Well, this is rather disappointing news in the sense of a reduction of dividend. It has resulted in an upgraded dividend safety score of 70, making the dividend amount for AT&T to a safe level compared to what was previously marked as an unsafe dividend. Going forward, AT&T's dividend will consume roughly 40% of the company's free cash flow, down from around 60% previously. Retaining more cash flow would provide AT&T with flexibility to increase its investment in 5G wireless and fiber internet while enabling faster debt reduction. It is worth mentioning that AT&T's mobile phone services business now accounts for around 80% of their operating income, followed by business wireless contributing roughly 15% of profit and consumer wireline adding about 5%. These defensive businesses benefit from having large subscriber base, recurring revenue, recession-resistant services, and high barriers to entry, given their capital intensity, which provides some level of moat around AT&T business. AT&T's wireless and broadband services drive the bulk of profits and are already recording top and bottom line growth. These businesses should further benefit from management's increased focus and higher capital spending on 5G spectrum deployment and high-speed fiber lines. For now, income investors should probably expect no more than low single-digit dividend growth as management prioritizes network investment and debt reduction. But the outlook for payout raises will improve by late 2023 if all goes according to plan, according to Simply Safe Dividends. Looking at the revenue estimates by analysts on Seeking Alpha, the estimates for 2022 year in terms of the revenue is at $155.9 billion, which is lower than that of the past 5 years. That said, this revenue estimate is going to grow in 2023 to reach $159.1 billion. Looking at the price targets by analysts on TipRanks have a price target of $29.69. And given the last trading price of $24.14 for the stock, that shows an upside of close to 23% if that estimated average price holds true in 1 year. And this is based on 14 analysts covering the stock on TipRanks, with 8 of them giving the stock a buy rating, 5 of them giving it a hold rating, and 1 a sell, resulting in an overall moderate buy for AT&T stock. AT&T stock, it's traded on New York Stock Exchange with ticker symbol T, and analysts on Yahoo Finance have a price target of $29.10. Similar type of upside, around 29 to 30% upside based on analysts on Yahoo Finance. And lastly, of course, if you look at analysts on Simply Wall Street and their assessment of the fair valuation for AT&T stock, they have a fair value of $96.85, suggesting the stock is undervalued by about 75%. Looking at the past stock price performance for AT&T stock, the 1-year return for the stock is about negative 21.4%. The 6 months return is negative 10.6%. 1 month's return is at positive 2.3 or 2.4%. And if we look at the past 5 days or past week, the stock is up by about 4%. It's also worthwhile mentioning that in the past 5 years, the stock is down by close to 42%, which is disappointing in that sense. That being said, AT&T has been a solid dividend payer for many years. In fact, they've paid their dividend consecutively for the past 37 years. However, they have recently declined their dividend, as we talked about it in this video, by close to 47%. So they don't have any streak of dividend growth as a result of that. Are you currently investing in AT&T stock? Let us know in the comment section down below. We hope you found this video beneficial and gained something of value from it, and it provided you some of the latest and greatest news about AT&T stock, where it stands, and what is some of the prospects of the stock based on analyst estimates and based on some of the numbers that we've analyzed. If you gained something of value from the video, don't forget to smash that like button and subscribe to our channel for more videos about investing, including investing in the dividend stock, growth stocks, and penny stocks, as well as talking about cryptocurrencies and ways to reach financial freedom. Thank you, and we hope to see you next time.